Welcome, wealth builders. Today, we're diving headfirst into the thrilling roller coaster that is wealth creation. Imagine the wind in your hair as you ascend to financial independence and the freedom it brings. Not as scary as that loop-the-loop, right? Remember to hit that like button to support our channel. Every click counts. Diving right in, wealth building isn't rocket science, but it does require some know-how. It all begins with three fundamental principles: saving, investing, and diversifying income streams. Let's start with saving. It's the cornerstone of wealth building, acting as the springboard that launches your financial journey. Think of saving as a safety net, a cushion that protects you from financial falls. Now, imagine if you save 10% of your earnings each month. Over a year, that's more than a month's worth of income tucked away. Over a decade, that's a year's worth of income. Impressive, right? Next up, investing. This is where your money starts to work for you. By investing wisely, you can generate a return on your hard-earned cash. And the beauty of it is, it's a compounding game. The more you invest, the more your money grows, and the more your money grows, the more you can invest. It's like a snowball rolling down a hill, picking up speed and size as it goes. Lastly, let's talk about diversifying income streams. Gone are the days when one job was enough. Today, having multiple income streams is not just a luxury, but a necessity. Whether it's a side hustle, rental income, or even dividends from your investments, having a variety of income sources provides a safety net against the unexpected. Now, these might sound like simple strategies, but their impact over time is profound. Just like how a single drop of water can create a ripple effect, your financial decisions today can shape your wealth tomorrow. So, the basics are quite simple: save, invest, and diversify. But let's delve deeper into each one. Saving, the first step to building wealth, but often the most overlooked. Let's take a moment to understand the power of saving. It's not just about putting aside a few dollars every now and then, it's about building a financial buffer, a safety net for those rainy days, and a stepping stone to greater wealth. Now you might be thinking, I can't save much, it won't make a difference. But that's where you're wrong. Let's look at some numbers. If you save just $20 a week, at the end of the year, you'll have over $1,000. That's a good start, isn't it? And if you keep this up for 10 years, even without interest, you're looking at over $10,000. Now imagine if you put that money in a savings account with interest. The numbers just keep growing. So, how do we start saving? Well, it's simpler than you think. Start by looking at your expenses. Are there things you're spending money on that you don't really need? Maybe that daily cup of coffee from the fancy cafe, or the subscription service you hardly use? Cutting back on these can free up some cash for your savings. Another effective way to save is to set up automatic savings. Most banks offer services where a certain amount is automatically moved from your checking account to your savings account every month. You won't even miss the money, and before you know it, your savings will start to pile up. And let's not forget about the small change. Those pennies and nickels might not seem like much, but they add up over time. Keep a jar for your spare change, and you'll be surprised at how much you can save without even trying. Remember, a penny saved is a penny earned, but what do you do with those saved pennies? Stay tuned to find out. Investing, the secret sauce to multiplying your wealth. It's like a magician's trick. But instead of pulling rabbits out of a hat, you're pulling money out of the market. Now imagine you're a farmer. You've got a handful of seeds. You could eat them now, sure, but if you plant them and nurture them, they could grow into a bountiful harvest. That's what investing is like. You start with a little money, your seeds. This could be $100, $1,000, or even $10,000. You take that money and you put it into the market. This could be stocks, bonds, real estate, or even a small business. These are your fields. Just like a farmer, you don't just throw your seeds into the wind and hope for the best. You do your research, you study the soil, the weather patterns, and the best time to plant. In investing, this means studying the market, the economy, and the history of the investment. You need to know what you're getting into. Once you've planted your seeds, it's time for the magic to happen. With the right conditions and care, your seeds start to grow. In the market, this means your investments start to make money. This could be through dividends, appreciation, or rental income. The money you make can then be reinvested, buying more seeds to plant in your fields. But remember, investing is not a get-rich-quick scheme. It's a long-term game. Just like a tree doesn't grow overnight, your investments need time to mature. They need to weather storms and endure droughts. But if you're patient and attentive, your investments could grow into a mighty money tree. Investing is like planting a money tree, but it needs time and attention to grow. So are you ready to start your garden? Diversification, the safety net in your wealth-building journey. Now let's talk about what diversification actually means. Imagine you're at a buffet, and instead of loading your plate with just spaghetti, you decide to scoop a little bit of everything. That's diversification in a nutshell. It's the art of spreading your investments across various asset classes to minimize risk and maximize returns. Think of it this way. If you put all your eggs in one basket and that basket falls, well, you're out of eggs. But if you place your eggs in different baskets, the chances of losing them all at once are significantly reduced. That's the power of diversification. It's your financial safety net, ensuring that a stumble in one sector doesn't trip up your entire financial plan. Let's break it down further. Diversification is more than just investing in different stocks or bonds. It's about having multiple income streams. For instance, you could be earning a salary from your job, profits from your own business, rental income from real estate, or dividends from your investments. Each of these sources provides a layer of financial security, buffering you from the unexpected. Now, diversification isn't a one-size-fits-all approach. It's a strategy that needs to be tailored to your financial goals, risk tolerance, and investment horizon. Some people might diversify by starting a side hustle. Others might invest in a range of different asset classes like stocks, bonds, real estate, or even commodities. The key is to find what works best for you and to keep reassessing as your financial situation evolves. Remember, diversification doesn't guarantee profits or protect against all losses, but it does increase the chances of achieving long-term financial stability. It's like having multiple engines on an airplane. If one engine fails, the others keep you flying. Diversification is your financial umbrella, protecting you from any economic storms. It's an essential tool in your wealth-building toolkit. So, spread your investments, create multiple income streams, and remember, don't put all your eggs in one basket. Wealth building is a journey, not a sprint. Remember, mastering the basics, saving diligently, investing wisely, and diversifying your portfolio are crucial steps in this marathon. So, go ahead, take your first stride towards building wealth. Don't forget to subscribe to our channel for more insightful videos on building wealth. And if you found this video helpful, hit that like button. Until next time, happy wealth building.